Hello, yet another bearish week for energy prices, so let's take a look at the week's actions in some more detail. Front month Brent posted marginal gains on Monday as supply disruptions continue in Libya. The National Oil Corporation declared force majeure on the loading of oil from two major oil fields, and unless operations return, the crude output will be reduced to 72,000 barrels per day, which is down from 1.2 million barrels per day. Upward pressure was, however, short-lived, and contracts fell throughout Tuesday. Supply disruptions were overshadowed by global oversupply. Prices continued to fall on Wednesday, following a statement by the IEA suggesting they expect the markets to be in surplus by 1 million barrels per day in the first half of this year. As a result, Brent fell $1.18 per barrel day on day. The losses were extended into Thursday's session, with another $1.47 per barrel being removed from the front month contract, as reduced demand and oversupply weighs on prices. Last night, front month Brent closed at $62 per barrel, down nearly $3 per barrel compared to last week.
Forecasts of mild and windy weather pressured near-term gas contracts lower on Monday, whilst most curve contracts traded sideways. Prices were directed higher on Tuesday thanks to strong trading on the coal markets. The bullish sentiment was reversed on Wednesday as coal markets eased. Wind generation is forecast to increase, which means demand for gas-fired generation is likely to be reduced, all of which pressured gas contracts lower. Prices continued to soften on Thursday as mild weather reduced demand. Last night, all curve contracts closed lower than last Friday. April 20 lost 1.8 pence per firm, which is nearly a 7% drop.
Despite wind generation being 1.7 gig below the seasonal norm, all electricity contracts closed lower on Monday as they tracked the movements of their gas counterparts. As wind generation continued to contribute less to the mix, coal and gas generation increased. And with a bullish coal market on Tuesday, most power contracts also rose. Wednesday was a bearish day and all of Tuesday's gains were reversed. Prices softened in line with the wider energy complex. Prices then continued to weaken on Thursday, and as a result, all curve contracts closed lower than last Friday. Summer 20 fell £1.45 per megawatt hour, winter 20 2.25, which is a 4% and 5% loss respectively. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.